Problem 7A-4. This is a good summary problem. We will complete a payroll register, calculate the employer payroll taxes, and then do our journal transactions. So it says you gathered the following data from time cards and individual employee earnings records. So we've got data on the employees. So it looks like we've got 4 employees. We've got their allowances and marital status, cumulative earnings before this payroll, their biweekly salary. So it looks like everyone's salaried. Check number, and then the department number that they work in. We need the department information for our journal entries so we know whose wages go against which department's budget. Let's see what else we have here. Here's the assumptions. OSTI is 6.2% on 127,200. Medicare is 1.45% on all earnings. We'll use a FIT table. State income tax is 9% of gross pay. Union dues are $11 biweekly. SUTA rate is 5%, and FUTA is 0.6% on earnings up to $7,000. It says note that the $7,000 wage base applies to both FUTA and SUTA. And then we've got our FIT table. So the first thing we need is this data. And we're going to fill in the prior earnings year-to-date column. So I'm just going to copy and paste cumulative earnings before this payroll. Copy, paste. I love copy and paste. Poor Sam's doesn't get paid much. Salary, we can fill in this column. Copy and paste. Now we need the totals. So when we total up the prior earnings year to date, we get $153,400. And when we total up the salary column, we get $6,430. Now notice this says biweekly salary, so all of these people are salaried workers. Therefore, we will leave this information, the regular hours and overtime hours, blank. And it even reminds you, if a box is not used in the table, leave the box empty. Do not enter a 0. Abbreviations: allow equals allowances. YTD is year to date. FIT is federal income tax. SIT is state income tax. EXP is expense. And of course, round the final answers to the nearest cent as needed. So now we need the gross pay, which is just going to be copying the salary over. Including the total. And then for current earnings year to date, we're just going to take the prior earnings and add the gross pay. And like I mentioned in a similar homework problem, if you want to set up an Excel spreadsheet to do this for you, go ahead. It'll be great and practice using Excel. Of course, you don't have to use Excel. Excel is not a requirement of this class. So 47,500 plus 2,000 gives us 49,500. 64,300 plus 2070 gives us 66,370. And then we've got 5,000 for Sam's. When we add up this column, current earnings year to date, we get 159,830. 159,830. Now I'm going to move this screen up. And check my answer. Okay, now page 2 of the payroll register. We now need taxable earnings. Remember, this is not the deduction. The deductions go over here. So how much of the gross pay is going to be taxable for FUTA, SUTA. So we have to go, well, first of all, we have to remember what is the wage base for FUTA SUTA. If you forgot, in the assumptions, it reminds you that the wage base is 7,000. So we have to look back up here to see who has been paid more than 7,000. If they've been paid more than 7,000 prior to this paycheck, then 0 is taxable. So how much of Aiken's salary is taxable? 0. But don't put a 0 in here. For some reason, my accounting line will deduct points for that, which I think is kind of dumb. Gus, he's over the limit, he or she. Mayo is over the limit. And then here we go. So Sam's is still under the $7,000 wage base for FUTA SUTA. So we have to figure out how much of Sam's salary, $800, is taxable for FUTA SUTA. All of it, because if you take 4,200 plus 800, Sam is still under the 7,000 wage base. So $800 is taxable for Sam, and $800 is the total. Now how about Osti? What is the wage base for Osti? If you forgot, it's in the assumptions table, and it says the wage base is $127,200. So let's look at each employee's prior plus their current salary. Will anyone be anywhere close to the 127,000 limit? No. So therefore, all of their salary, or technically all of their gross pay, which is the same in this case, is going to be taxable for Osti. And don't forget to copy and paste your total over. Then fit. So for fit, we need to open up our fit table. And so for Aiken, we need to find Aiken's allowances. Aiken's allowance is 3, so we're using this column over here. And we're going to look up his or her gross pay, $1,560, so I need to scroll down. $1,560, and I already forgot which column I'm using. The three allowances, so it's 1, 2, 3, 4, the fourth column over. So 1,560, we can't use this row because it says less than 1,560, so we're going to use this row. So we're going to go over 4 columns. 1, 2, 3, 4. So it looks like Aiken's fit deduction is 134. Now I'm not going to sit here and do all of them, make you watch me do this. I think you get the gist of things. So I'm just going to enter in the other people's fit calculations for a total of 733. Now for state income tax, we need to go back and look at our assumptions. The state income tax says it's 9% of gross pay. So I'll do the first person with you. So gross pay for Aiken is $1,560. So I'm going to open up my calculator. So I'm going to enter 1,560, 1,560 times 0.09 gives us 140.4. Now you can enter as 140.4 like that if you want. You don't have to enter the second 0. Most students do because it bugs them without that 0. So I'm not going to sit here and make you watch me do all these calculations. So I'll just enter in all the others. 180, 186.3, 72 for a total of 578.70. And then we need to calculate the deductions. Now remember, all these 5 of these columns, fit, SIT, OSTI, Medicare, and union dues, are deductions. So these are the actual tax. So the tax for OSTI is 6.2% of gross pay. So I'm going to clear my calculator. 1,560 times 0.062 equals $96.72. Now if you have trouble converting the 6.2% to a decimal, you just type in 6.2 divide by 100, and that converts it into the decimal equivalent of 6.2%. And then I can multiply by the next person's gross pay of $2,000, gives us $124 for Gus, and then I'll just plug in the other numbers for you. Let's see, we've got 128.34, we got 49.60, for a total of 398.66. Medicare. Medicare, of course, is 1.45%. So I'll type in 1, let me clear it, 1.45, and then to convert that to a decimal, divide by 100, equals, and then I can multiply that by the 1560 gross pay of Aiken, times 1560 equals 2262, and I'll just plug in the other, well, let's do one that we have to round so you get the idea of rounding. So let me plug in Gus's for you. It's $29, and then let me show you Mayo. So Mayo, we're going to type in, because I want to show you the rounding example, 0.0145 times 2070, 2070 equals 30.015. Now we have to round this to two decimals. So is this closer to 30.01 or 30.02? Well, since this ends with a 5, we have to round the first number up. So this becomes 30.02. And then Sam's, we got 0.0145 times 800 equals $11.60. We're going to add these up, and we get, what, 93.24. Union dues are $11 biweekly, so just plug in 11, hit the down arrow, 11, down arrow, 11, down arrow, 11, down arrow, 44. Now here's where Excel comes in handy. For net pay, we're going to take the gross pay minus these deductions. I'm not going to sit here and make you watch me do the arithmetic. So I'm going to plug in the numbers. For a total of 4582.40. And then here's a part that students sometimes get confused about: expense account charge. So we have to figure out which department each employee is in, and we do that with this information over here, the department. So it looks like, let me see if I can get this all on the screen at one time. Looks like Aiken is in the production department. So Aiken's gross pay, here we go. Aiken's gross pay is $15.60. So remember, it's the gross pay that goes in here because it's the gross pay that's going to be charged against these departments. $15.60. And then office, Gus is in the office department, so I'm going to copy 2,000 gross pay to the office column. Jules is in the production, so I'm going to copy Jules to the production department column. And then Sam's is in the office, so almost grabbed the wrong thing. So our totals are 2,800 and 3630. Check our answer. So again, don't forget that what goes in the expense account charge column is the gross pay, not the net pay. Now we're going to calculate the employer taxes of FICA OSTI, Medicare, FUTA, and SUTA. Well, for OSTI, it's simple. You're just going to copy and paste the total of the employees. So OSTI and Medicare, The employer is just going to match the amount that the employees paid. And then for FUTA and SUTA, well, let's just start with FUTA. FUTA, we have to use the taxable earnings column. And how much is taxable for FUTA? Only $800. So I need my calculator. So the formula, or excuse me, the rate for FUTA is 0.6%. So for 0.6%, I'm going to type in 0.6. To convert that to a decimal, divide by 100. So that gives us 0.006. So then I can multiply that times the $800, which we get from here, gives us a whopping $4.80. Then for SUTA, we need to find the taxable amount for SUTA. It's 800. So I'm going to plug in 800. And what is the SUTA tax rate? 5%. So multiply 800 times 0.05 should give us like 40 bucks. 40. Now we can add this column, and we get a total employer taxes of 536.70. Now we get to do the journal entry. So remember, the first journal entry is going to be recording the employee's information. So we start off with gross pay. So how much is our gross pay? Well, gross pay is $64.30. However, this company chooses to do budgeting for two different departments. So we have to keep track of the gross pay, which is this amount, and label those separately. So we're going to have production salaries expense, and then office salaries expense. So for the production salaries expense, I'm going to take this $36.30, copy and paste it down here. And for the office salaries expense, I'm going to copy and paste the $2,800 down here. So we've got our gross pay as debits, and then we're going to list all of the deductions. So our deductions start over here with FIT. Remember, here's our deductions. So FIT, we've got $733. SIT, let me put the FIT payable. FIT tax payable. Then we got SIT tax payable, or SIT there. Yeah, SIT payable. This, by the way, this FIT tax payable is redundant. FIT stands for federal income tax. So you're basically saying federal income tax payable. Anyway, so SIT payable, we've got 578.7. Then we've got OSTI. OSTI payable, FICA OSTI payable. And then we've got Medicare payable, 93.24. And then we've got the union dues payable, 44. And then we've got salaries payable. So the balancing amount is salaries payable. We've already, and remember, this salaries payable, this is net pay. And we've calculated net pay right here. So I can just copy and paste this. So before you hit check answer, I recommend you add these two and make sure they equal the total of the credit column. And then finally, we're going to have the second journal entry, which is the employer's payroll tax expense. So for that, we have payroll tax expense as the debit. And then we list all of the employer payroll taxes, which we've got right up here. So we've got OSTI 398.66. Then we've got Medicare, 93.24. And then we've got FUTA, 4.8. And then we've got SUTA of $40. When we add these all up, which we've already done up here, we have a total of 536.70. Now remember, there is a third journal entry, and for some reason the authors did not make you do that. But the third one is super simple. You just take the salaries payable. Well, you do it when you actually pay the employee. So you take the salaries payable, you have to make that go zero. So you would debit salaries payable, and then cash or cash payroll would be the credit. But that's it for this problem.